show now is Narayana Health. The company announced the launch of its first health insurance product called Aditi. The plan is launched in 4 districts around Mysore initially, allowing them space to gather feedback. Viren Shetty, Executive Vice Chairman of Narayana Health, joins us now to talk more about that. Viren, thanks a lot for joining in. I just want to understand a little bit about what the scope is in this, with this product. I mean, you've made headlines with this product, Aditi. But I want to just understand, would this product only be available for treatment at Narayana hospitals, or are you looking at, sort of offering this product across all hospitals? And in terms of geographies as well, what are we looking at?
Sure. What would differentiate our insurance offering compared to most other insurance offerings that are on the market is, one, it is very comprehensive. It covers a very large range of procedures, and it will operate in a narrow network. So it wouldn't be restricted just to getting treated in our hospital. For emergencies, you can get treated anywhere. But one of the key features of the product is that it will work in a very narrow coverage area. We're not looking for national distribution anytime soon. And so this is how we're able to offer it at such an attractive price.
Right. Sorry, Viren, hi, morning. Prashant here, and congratulations. So, just to clarify, you're saying that this is, for now, only your hospitals? Only the Narayana hospitals?
It will start out in our hospitals, and as it rolls out, we will start adding more and more hospitals to the coverage area. But one of the features of this product, which some people may find quite different from what's available in the market, is that we will not look to cover thousands and thousands of hospitals under this. There will be very few hospitals that are vetted, verified by us, and that offer really good quality of care. That will be in network, and that will be part of the cashless plan.
Okay. I'll ask you two things. One is when you say it'll stay a little narrow, right? I mean, the product, even after it goes beyond the Narayana hospital, beyond the Narayana hospitals. So what is narrow, and what are you looking at in terms of the expanse and breadth of offering this product? And second, will this price stay the same, or will we see upward revision over the next couple of years? 10,000 rupees per year. And what are we baking in here?
Yeah. So the Aditi plan that we offered is the entry-level plan. This is the most basic offering. This is mostly aligned around surgeries and life-saving procedures. It doesn't cover much by way of medical, and it's not as comprehensive as the plans we will announce later. The next plan we should announce sometime end of this month or early next month will be much more comprehensive. That will include a lot of outpatient benefits, and that will be priced a little higher, but that, of course, covers a lot more. Aditi plan covers your stay in a general ward. The other plans will cover in a semi-private, and there'll be one plan that comes above that. That's for private and deluxe ward. So the pricing will be adjusted accordingly. Within Aditi itself, the pricing also adjusts based on the risk factors, based on the age, based on the comorbidities, based on the size of the family that you're looking at. The price will adjust slightly upwards and downwards from there.
So but in terms of actual taking price increases for this 10,000, the basic Aditi plan, what will... the adjustments, of course, it will depend on individual factors, but say 2-3 years down the line, will this base 10,000 rupees stay 10,000, or will we see a sort of price increase?
A lot of that will depend on how we see the utilization of the plan and how the costs go out. So 10,000 is the entry-level price. We have priced it quite aggressively for 2 reasons. One is that we want people to experience what it is to get insurance for the first time. The other is it is also a very large learning experience for us. For us, we're trying to understand. Now, we've done a lot of actuarial model and figure that this is a sort of break-even price. But if it turns out either utilization is a lot higher, then the price may go up. If it turns out utilization is a lot less, if we are successful in the mission, what we started out with, which is preventing hospitalization and getting people more into prevention mode and getting them a lot more healthy, utilization comes down, then there's no reason for us to increase the price.
All right. Hi, Viren. Good morning and congrats on this new initiative. On a like-to-like basis, this 10,000 rupee insurance policy that you're offering, in comparison to its peers, what is it? Is it at half? Is it at a fourth? Because normally a 1 crore cover would come at a premium of around 40 to 50,000, very, very roughly. So how much low are you?
You just said it, right? At 1 crore cover for 10,000, it is quite low. So we did price this extremely competitively.
Yes.
But it is very different from the other plans in that while they do 1 crore at a much higher price, they cover the whole country, they cover a very large number of hospitals, whereas for us, we are very narrow in scope. And it's restricted at this point just to Mysore and the surrounding areas, Chamarajanagar, Hassan, Mandya, so on. So it allows us to really try a different model, which is not distributor driven, which is driven through our internal network, and try and see if we're able to save a lot of costs on that front and pass those costs on, pass the saving on to the patients.
Okay, all right. Just to understand a little bit more on the financial aspect, the loss ratio for various health insurance companies is in that vicinity of around 65 to around 80%. What about y'all? What's the matrix y'all will be operating at?
We've projected it to be more or less the same. The data as it comes in, we'll be in a much better position to tell everybody in a year or two how this pans out. But we've expected that utilization claims ratio would be more or less on par with plans of a similar size.
Okay. So you've told us about the Aditi insurance plan. What else is in the pipeline? What are we looking at in terms of products from the Narayana Health stable over the next 1 year or so?
What we've planned are 2 more products. So Aditi is the entry-level mass market product. There will be 1 more that is designed more for the middle class. This costs a little bit more, offers much wider range of coverage, mostly in the realm of outpatient benefits, which is testing, unlimited consultation with the doctor, medical cover, as well as inpatient stay at semi-private rooms. And of course, there's a plan that's much higher than that, which is everything, plus a lot more concierge services and a much higher amount of unlimited benefits.
Okay. So, I just had one more question. I mean, since you're getting into this space, it is become a very competitive space now, and standalone health insurers take about 7 to 9 years to break even. I just want to understand, I mean, since you are entering the space, what is the kind of break-even timeline that you're looking at for the insurance business?
Not 7 to 8 years, at least in the business plan that we projected, it would be less because we're not chasing scale. Our plan was never to become a national level insurance provider and to restrict it to, at least we're starting out with 3 states, and to keep the numbers low and to keep the amount of cover quite moderated and to be able to provide high levels of service. So we projected a much lower break-even point, but to be fair, a lot of this exists on a spreadsheet. The reality is that you are right. It's a very competitive space. A lot of products are out there, but we believe that we want to provide something that's very, very different from what's there in the market. And it should not boil down to a numbers game. And it should be something that people enjoy, they love, and they get a tremendous amount of benefit from. And we're able to provide some extreme surplus to customers from that front, and we believe we'll be quite successful in this.
Well, the intent is good, Viren, and kudos on that front. But, if it's going to be lower than 7 to 9 years, as per the spreadsheet at least, what are you projecting? 4 or 5 years to break even?
Well, I've been told not to talk about those things, especially during the silent period. But yes, it is something that we are confident that investment in the insurance shouldn't be any different from the investment that we're making in the hospital business. And the amount of money that we set aside for the insurance would be as much as we'd set aside for creating a brand new hospital. In the amount of capex outlay of 300, 400 crores would be roughly equivalent to how much we'd invest in the insurance. And the break-even period for hospitals, again, is between 2 to 5 years. And this, again, would be planned the same way.
Okay. So for the health insurance industry, right, there are some changes that have been brought about by IRDAI. I just want to understand a little bit about that. The moratorium period has been cut to 5 years. Waiting period has been reduced to 3 years from 4 years, and which is a really big relief. I mean, waiting period for critical illnesses at 4 years is something that a lot of people can't manage, given how much illnesses like cancer have started to spread, right? But would it be possible to implement these for the health insurance industry, the changes that have been brought about?
See, the one thing we'd have to say, our entire effort of applying for an insurance license and getting the fastest approval in the history of this country would have absolutely not been possible with the sheer number of reforms that the IRDA has been pushing through. Now, they have a mandate that the insurance penetration in India is in single-digit percentage, and they need to bring it up to 40%. And the sort of reform that are required to make insurance available to 40, 50% of the population are along the lines of all the consumer-friendly things that you mentioned, which is the increasing the age limit, reducing the waiting period, and so on. So whether it's practical or not, these are the guidelines and recommendations. It's up to a healthy conversation between the insurance companies and the regulator, as well as their customers, to find out what is the right mix of things that are good for patients and things that are good for the numbers. If it is tilted too much in favor of making the economics of insurance looks good, no customer's happy, because you end up with claims being rejected, you end up with a lot of dissatisfied and customers and mis-selling. So there is a healthy mix between the two. On the practicality of it, we're always more oriented towards what is best for the patients, what's best for the customers, and we will constantly push for that.
All right, Viren, Good luck to you and your team as you sort of roll this out, and look forward to speaking with you again soon after the first quarter results come through. Appreciate it very much here on CNBC TV 18. There's Narayana.